This is Dr. Keith. How's everyone doing today? I made it. Yep, I am now in North Carolina. Can everybody see my charts and hear me okay? Jim, nice to see you. So a couple things housekeeping first of all. I was super excited. I was going to get real internet service today from my new location. They came out and the DSL cable that they had from the previous is bad. So now they have to schedule somebody else to come back, lay the cable again before I get the faster internet. Okay. So the reason I'm telling you that is I'm only going to have Thinkorswim open today, not TradeStation as well, because the more I put into the system, the worse the internet is right now. Okay. So in saying that, hopefully you can hear me okay. Hopefully you can see my screen okay. But you know, moving across country has advantages and disadvantages, I guess. And so now I'm just getting all that cosmetic stuff and taken care of. Okay. Thomas, I was from Oregon, so we went from West Coast to East Coast. Yep. Anyways, beautiful here. I'm super excited to be here. As you know, I just want to get everything situated so that I can resume normal life, right? The good news from a trading perspective, I actually couldn't have left at a better time, right? The markets have been pretty sideways to down, yet from a seasonal perspective, markets are typically going to start heading higher, right? So, you know, I know folks that like to short the market. You know, I've got a couple, a few emails throughout the time I was traveling saying, hey, you know, you're data mining, there are some great short plays. I'm taking them, and you know, those probably get to work out. No, we're actually voting here. We did an absentee voting a while ago, so we're good on that. Okay. Anyway, so you know, from market condition, and we're going to go over a few things today, like we normally do, and leave time for Q&A. I do have to keep today to 45 minutes, though, as I got another appointment coming this afternoon for something else as well. But in saying that, things are getting back to normal for me. Thanks for all the emails and so forth. We made it. All of our animals made it, and we're now officially in North Carolina. Okay. Okay, so let me first bring up the dollar index. Interesting enough, so we know from a seasonal perspective, we typically top right around the end of December, correct? So what I have up here now, and I talked a little bit about it, 3 weeks ago, is these candlesticks are actually the Heikin-Ashi, okay? Now, what I did is I had a program where you can still see the actual price as well. The white bar is the open today. The red bar is the close today of actual price, okay? And the way I can show you that to make sure you understand, if I just go to a regular candlestick, you see how the white is at the open, the red is at the close, right? So in this downward, the open, the close. Because I've been using Heikin-Ashi in this market environment, I wanted to be able to keep it all on Heikin-Ashi, yet still show you the actual price of what it did, right? So, you know, the dollar index closed today right here, right on this red line, if that makes sense, okay? And I am going to do a separate webinar on Heikin-Ashi. You know, one of the things as, you know, a full-time trader, researcher, one of the things that I'm always looking at, and I've used Heikin-Ashi over the years, okay? Now with programming, though, it's made it a lot easier to use something like Heikin-Ashi and really make trading simple, with the fact, and the asterisk is, right, we know the seasonal influences. So, you know, here's a great example on the dollar index, okay, where we can see we have a seasonal long. Okay, I've been only looking for longs. Okay, is this the new bottom? Well, Hackenacci is now saying we're green, meaning it's, you know, it's a long play, a change in direction now long. Okay, and I have the green dot, which is verifying that, and then you can see we have the Laguerre trigger at the end of the day today. Okay, so for my live alert system today, once I do it, you know, the dollar index is going to be a long trigger at this point, okay? But what you can see is the advantage of using Hackenacci, which I label as HA, okay? It helps you keep in the trend better, okay? So back here, you know, you've got these green dots, okay? You basically can stay into the trade until you get a red. Okay, then you can get back in on the green, exit on the red. Okay, again, assuming you're talking long plays in that. We'll go over lots of examples here just to kind of get you familiar with it. The intent of today is not to make, you know, not that you'll become an expert in using Hackenacci and when to get in and when to get out. It's just to introduce you to it. And again, I will hold a separate webinar on this. So the dollar index, looking for longs, looks like the trigger is going to be today for a long play on dollar. All right, so let's talk S&P 500, okay? So very interesting enough. So again, you can see this is where it opened and this is where it's closing right now, right? So down day. And then when you look at Hackenacci itself, the candle, right? Those of you that are familiar with candlesticks, right? That's a pretty aggressive red fill here, meaning, you know, this is a bearish time right now, right? And we've seen it throughout here. Okay, if you would have taken the short trigger here, which full disclosure, I did not. I am not looking to go short right now, but if you did, okay, you can get in when the dot turns red and exit the trade when you get your next green dot. So we haven't had one yet, right? We had a couple of yellows. We have not had a green dot. And that's the beauty, okay? You can literally stay in this trade, take some profits, but stay in the trade until you get a green dot. When is that going to be? Right? That's what we don't know, okay? So when I back up a little bit here during this nice uptrend in the markets, right? Right here would have been an entry. We went from a red dot to a yellow. So the green could have been your entry, okay? Then you exit at the red dot, okay, which was right here. So this is the trade you would have made during that type of uptrend. And so when you have markets that trend, and when you have markets that go sideways, it can be extremely useful because the Hackenacci isn't as reactive as actual price. It says, chill, Dr. Keith, relax, okay? And we're not going to just aggressively change and get out of a trade until we get that red dot, okay? So this is something that, again, I've used in the past. Now I've got it programmed, so it's much easier. I can actually do a scan now that I'll show you in a couple weeks, that I can show you the ones that went from yellow to green or yellow to red. You know, that way, if you're looking at something that recently changed trend in the direction of the seasonal, again, everything I do, folks, has to be in that direction of that seasonal move, okay? That doesn't mean you have to, but that's how I trade, okay? And so basically on the ES here, Hackenacci's saying, yeah, we're still heading lower here. There tends to be a lot of support right here, okay? Look at the Laguerre, we'll be patient. What I'm doing is I'm gonna take a long play on the ES or the Spider or the NASDAQ, you know, any of these, right? Once we get a green dot with the Laguerre heading up, okay? So those specific rules can keep me out of trouble, okay? If you took the short, some of you did, you can literally stay in now until we get a green dot or you get a changing color of that candle, okay? That will help you a lot, you know, when you get into a trade, okay? Okay, so NASDAQ, same thing, right? They look the same, but again, I'm looking for bullish activity here, okay? One thing to note, retailers are now about 50-50, meaning half of them are short, half of them are long. So what does that tell us? It tells us that they're really not sure what's going on right now. So it doesn't mean we can't make trades right now. It just means that the inexperienced traders, they're not significantly long or short right now. They're confused as hell, okay? And when they're not confused, they're usually wrong, right? So we go the opposite direction. So right now, from a sentiment perspective, there is no big advantage in either direction, okay? So that way, again, going back to the seasonal, I'm more biased to the long side. I'm just being patient here, okay? Waiting for a green dot, Laguerre to head higher, right? And then we're good to go to the upside, okay? All right, Mrs. VIX. You can see here, interesting enough, right? We keep getting spikes up to this level right here, and then it rolls over. And look where we're at. So if you wanted to short the VIX, wait for a red dot, or wait for a red Heikin-Achi candle, right? Then it could be time to short that, okay? You can see we got a short-term move here coming, okay? So on the VIX right now, it spiked up right here to a recent high almost, right? Now, is it going to continue higher or lower at this point? We'll see. This solid Heikin-Achi candle here, a lot of green, is a bullish activity, okay? But we also have the wick here, okay? So there's a lot going on right now behind the scenes, a lot of battles on which direction are we going to go. All right, crude. Finally got the nice trigger on crude, right? I was gone. And if you're in this trade, here's where it's closing right now. Stay in until you get a green dot, okay? Does seem to be 37 as a lot of support, right? So you can, potentially exit right around there if you'd like. But retailers are long crude oil, which is what we want to see when we want to continue on the short side based off of seasonality. And again, the Heikin-Achi gave us a great entry point here with the Laguerre, okay, on that short side move. Gold. So gold typically has lower now until right around December, right? And then we get the beautiful trade coming on the long side, right? There's also some support right here. I did a short trade on silver and hit profit target 1 today. Again, we had a red Heikin-Achi, we had the Laguerre trigger. That's powerful stuff. We just don't know how far this is going to go down, right? So again, you can protect yourself at this point if you're in the alert service. We hit profit target 1. You can put your stop at break even, and then basically take partial profits, and then you can stay in this now until you get a green dot, which would be a green candle here. Okay, a second green candle. Okay, so let's take a look at Euro US dollar from the Forex side, okay? So you can see from a seasonals perspective, we had lower. Okay, we now have the Laguerre, and we got the red dot, okay? So what we'll probably do is retest this bottom right here, okay? That'd be a nice move to make some money on the Euro US dollar. So again, a lot of wicks at this point, right? A lot of wicks. This is a very nice looking opportunity to the short side on the Euro. All right, let's pick some of our stocks now. So Netflix, okay? Again, interesting enough, it's kind of sideways right now from a seasonal perspective, right? then it takes off, right? But what's interesting is we're getting a lot of wicks right here, okay? So again, when the Laguerre goes to trigger and we get green dots, if you're looking to get into Netflix cheap, right? We're getting close, but beauty is you don't have to just guess, right? You don't have to guess. You can wait for the Laguerre to trigger. You can wait for the red dot. You know, Hackenacci is saying, you know, indecision right here is what Hackenacci is saying, okay? Yeah, it's red, but you're getting, in this case, you know, very, very thin bodies, which is telling you indecision. It could do this first, right? They could widen back out and then go up, or it could go up now. We'll just wait for the triggers to make that decision. Okay. My trade of the year, NVIDIA. So again, I'm only looking for longs here, right? I'm patient during this, okay? Even though it looks good after the fact, red, right? I don't want to do that, okay? If you did, stay in the trade until you get a green dot, okay? But look at that beautiful move. So what this is giving me now is a great opportunity here very soon, based on the rules, to go long. So again, the reason why I do these publicly for everybody is to just show you, you have to have specific rules. You don't have to sit there and read the paper and stress out, oh my gosh, I want to get into NVIDIA, but I don't know when. Have a specific system and rules. That way you just come in the next day or the evening and you look and you say, okay, you know, let's say on 11-9, the Laguerre triggers, you get a green Hackenacci dot, okay, then you take it, okay? I also love the uptrend, obviously, as we've talked about, you know, so, you know, just broke this 50 period. You know, is it going to stay down now first before it retrieves? If it does, we'll get even a better entry, right? We'll get even a better entry. So now we just wait. You know, that's why I said on my alert services for stocks, I picked a great week to move, right? Because there wasn't a lot out there anyway. We've had a lot of spiraling back and forth to the downside moves right now. Okay, let's bring up Apple. Great question, James. So James is saying, okay, Dr. Keith, you brought up Netflix. Let me bring it back up. Okay. And what he's saying is, even if you got a long trigger, he doesn't see a huge seasonal advantage during the next few weeks. And you're absolutely right. So if I was going to trade Netflix or NVIDIA, right, I'm going to trade NVIDIA. Okay, because NVIDIA's got a better seasonal. So great question. Now, in saying that, a lot of people will buy Netflix and hold, okay? And it doesn't mean it won't go up. It's just seasonally, it's usually indecisive right now, right? But if I had to pick between, let's say, 10 stocks when we all trigger around the same time here, it wouldn't be Netflix for exactly the reason you're saying. We don't have that huge seasonal advantage until we get into mid-November. So great point there. Absolutely. Absolutely. Okay. Let's see here. Let's take a look at Apple. So remember, folks, as of right now, right, here's where Apple closed right here, this red line. Okay, we're still at a higher low. So we're still in that uptrend. Okay, so again, we're getting yellow dots, some indecision. Okay, we don't have a green dot yet, and the Laguerre, you know, our very patient Laguerre is just waiting. Okay, but again, big picture, Apple's higher. You know, if you can get in here with a trigger at, let's say, I don't know, let's say right here, there's a way to work out. You got all this room here to the new recent high, right? That's a great potential entry. We're just being patient. Make sense to everyone? Okay. Facebook, same thing, okay? Tesla, same thing. So we're getting discounts here My point is when you're looking at these charts, okay, you can make money on the short side as well, absolutely. And they fall quicker than they go, okay? I prefer to make trades in the direction of the seasonal. And if that means there's certain weeks that I'm just sitting on my hands waiting for these stocks to retrace and then give me a long play, absolutely, I'll do that, okay? Okay. AMD, beautiful seasonal coming, right? You can see earnings was a little bit better. AMD is right here, right here where it tends to be some support. So if we get that green dot, we get that green candle, right? Watch out for AMD to head much higher here. Yeah, so great question. So I get a lot of questions about election, and you can go back and do a lot of different research on pre-election. Some people are going to be right this year, some are going to be wrong. We don't really know. Typically, stocks in that are bullish after the election, no matter who becomes president. Okay. So if I'm going to take a trade, let's say in 3 days I get triggers, okay, when the markets turn around again, okay, then I'm still going to take the trades. What I'm not going to do is execute a new trade the day before election day, because you may get something like this. Okay, you may get big wicks potentially as the market digests who becomes president again. Okay, so November, going into the November here, a few days before election, I'm not going to get into a brand new trade the day before. Okay, but right after election, I'm good. If I got into a trade this week, I'm good. Okay, now what I will do on election day is do some day trading. Okay, which I'll show you in a minute, kind of how I use that. Okay. All right, let me check some questions here. Yeah, so what I had programmed just for easier analysis for myself, because I like things simple, is when you have a this is a green dot, meaning that from a Heikinachi it's bullish. When you get a yellow dot, it just means that that candle changed colors. So we went from a green to a red Heikinachi. And then if you get a second red one after that, it turns red. Okay. And then because the next candle closed up, okay, right here is the green. It's hard to see, but that's a green. That's why it went back to yellow. So I usually stay in the trades. If I go in at a green, I don't usually exit until I get a red. Okay. The yellows are just kind of cautioning me, okay, for the most part. Okay. Okay. Amazon, right? We got earnings coming up tomorrow after the close. What am I hoping for? Well, I'm actually hoping it kind of heads down a little bit more, because it's going to give us a great entry. Okay. Mark my words, this is not the high on Amazon, folks, over the next year. Okay. So, we've got a nice seasonal move coming on Amazon. The better entry we can get, right, the better off we're going to be. So patience, patience, patience. Yes, we have elections coming up. We've got some unknowns. All that means is you can have some internal volatility. Google, nice uptrend again. We've got the red dot, red Heikinachi, but I am not shorting Google. Okay, I will wait for it to turn around like it did here, green dots, and that's how you make your money. Okay. Okay. So to kind of summarize, I'm still looking for long trades as they come, because I'm not looking to short the markets right now. I do think we're going to have another nice run up, and I don't want to be stuck short. Okay. But in saying that, I'm waiting, and I don't have a problem waiting on that. So One thing I wanted to show you today as well. So if I bring up my data mining for November, okay? And let's go based off a number of trades. So I'm going to pick an actual stock. So this is a good one right here, okay? Alcoa. Let me change the color on my drawing tool. Okay, this is the type of research I do, and that's why I think it's valuable to show you how I look for things. So Alcoa. If you entered specifically on November 10th and exited January 3rd, okay, if you just entered and exit based off of those days, over 49 years, right, it's been around 49 years, it's made money in 42 of those of an average of 9.3%, okay? And again, those of you that have watched my data mining webinars, I don't just go in though on November 10th, but I have to do that for data mining, right? I have to put actual entry and exit date. I just wait for an entry a week, up to 2 weeks early, and then anytime within this window here to go long on Alcoa. Okay, so that's one that's on my watch list, and I'm just waiting. Okay, I'm just waiting. So let's bring it up. Okay, so you can see Alcoa now heading back down, and what it's going to do is basically give us a better entry coming up here, right? Somewhere in November, December, okay? Let me hide this for a minute, and let's look at last year. Let me go back a little bit further. Bear with me. Okay. So last year's trade was right here. If you got in, that's a little early. So let's see, the Laguerre triggered here. So right here was the entry, and you look back, you got green dots, and then you exit on the red dot right here. Okay, so this was last year's trade to the long side. Okay. Not going to become rich off that one in that particular case, but that was the trade. So that's what I'm looking for this year, with the intent we make more than that, right? Daryl, let's see here. Bring it open. So Daryl said, look what the Southern did for me this year, okay? So you're looking for long plays based off of the data mining. So, we had a couple triggers, but right here was a trigger. And the beautiful thing is if you got in, right, you'll hit whatever profit target you want. But the cool thing is with the Hackenacci, if you get a red dot and you get out of the trade, you can then re-enter in the next green, okay? So let's say you had a couple break evens, bam, that's what you want. That, is what you're looking for. Thanks for sharing that example. All right. Let me bring up another data mining, just to kind of give you some ideas as we come up. So here's some that have worked out 30. So look at this one. This is interesting right here. PEG. So from 1126 to 131, 9% profit, 38 out of 39 years has made money. Okay. So PEG is one you want to keep an eye on. Let me bring it up. It started early this year. right? So now we want that retracement, okay? We have that retracement. So we had a couple triggers last year, right here, right here, right here. When you're looking at that data mining with that many years of data, right, you're just giving yourself high probabilities. You know, Corning, for example, you know, 15% move 81% of the time, right? So if you can maximize those, you know, some of the folks that I mentor with, this is their Bible. Everything they use and their watch list has to do with the data mining, and they wait for the triggers, and they're doing fantastic. So, you know, it also has one for bears, you know, so those of you that are bears, because even in an uptrend of the markets, there's seasonal shorts as well. Okay. Okay. Let's see, James. So, you know, one thing you got to be careful of, no matter how bullish the markets may be at the time. Let me just bring up the ES again. James has a great point, okay? So you're in an uptrend, you're gonna have these retracements, uptrend, retracements, right? This will probably stay as a higher low, is my guess, as we go higher, okay? But, you know, why most traders don't succeed isn't because they're wrong more than they're right. But, you know, you may see, let's say there's a bullish week and you see 12 trades that you really like and you take them all. So they're all directional trades in this, you know, going long. Well, you can either retire if they all work out, or you're going to blow your account out, right? So my point being is, in my opinion, what I teach in my mentoring is, you know, you should never risk more than 3%, maybe 5% on one trade, because nothing's perfect. And if you lose sleep at night, you're putting too much in on one trade, okay? The other thing is, I never have more than 5 open trades, okay, that haven't met a profit target in that same direction. So does that mean I miss trades at times? Absolutely. But, you know, let's say I had 5 open trades right now long, okay? If you had 5 open trades that were long, but you haven't met any of your profit targets, so you haven't eliminated any of your risk, okay? I'm not taking a 6th trade, okay? Because if something happens, World War III starts, okay, my 5 trades lose 100%, I only lost 15% of my account, okay? But once I've taken partial profits or eliminated my risk, then I don't count that and I'll add a new one. Okay, so that's just basic risk management. And, you know, you can talk to your financial advisor as well on that, or you could, you know, talk to me about it. But anytime somebody blows out an account, it's because they're not managing their money properly. Okay. I used to lose sleep in trades until I learned this. Okay. But I never, ever lose sleep based on my trades. Okay. The other thing you can do with Hackenacci, okay, I typically have my profit target 1 right now anyway, roughly a 50%, I eliminate risk, okay? And then I have a 50% on my losses at the close. So if it closes at the end of the day and I'm down 52%, I'll exit the trade the next morning. Okay? Now, with Hackenacci, because we're getting some more whipsawing, if you play it safer, okay, what you can do is, if you went long and it goes against you, and you get a close on the Hackenacci as a red, you get a red dot, for example. Let's say you're down 20% at that point, okay? You can choose to exit, take your, lick your wounds. Then when it turns back around, take it again, okay? There's no perfect answer because everyone's different, but we've all blown out accounts if we traded enough, okay? Thank God mine was a long time ago now. But if you just got to be honest with yourself, at times you're going to get excited, right? There's so many good opportunities, no matter what trading system that you're using, okay? So if you ever have more, in my opinion, than 15% of your account risking without eliminating risk, okay, you're putting yourself out there. Okay, what if COVID-2 happens or something of that nature? Okay, so again, that's why I trade 3 markets, right? I trade stocks, I trade futures, and I trade Forex. So I don't ever have an issue of number of trades. If you're only going to trade stocks and you're bullish, only have, in my opinion, 5 open trades at a time of about a 3% risk. Okay, once one of your trades is making money and you eliminate part of that risk, you can then count that as only 4 and take another trade. But if you do that and you're going to be right 80% of the time, you're going to make money. Okay. And trust me, a lot of you don't want to hear that because I was like that for a couple of years when I first started learning that, well, that's no fun. Okay. But trading is about running a marathon. Okay. Those of you with big accounts that you want to risk more because you're not using it to pay bills, absolutely you can risk more money. Just be aware of the risk. Okay. All right. Sorry, I don't usually try to get too much into that, but I wanted to make sure everyone's clear that, if the market crashes 2,000 points tomorrow and I'm long, the most I'm going to lose on my stocks is 15% of my account, which is still a big part of it, right? I mean, I don't want to make light of it like that's no big deal, okay? But I also diversify with futures and Forex as well, okay? Okay. The other thing you can do, folks, you got seasonal long and short plays. So if the market is kind of whipping back and forth on you, take them both. Take a long play, take a short play, and then let's say you get to the point that the long play is up 30% and the short play is down 20%, you can take that 10% next profit, okay? Or you can sit on your hands and wait. The market's always going to give us phenomenal opportunities, okay? Okay. All right, so what I wanted to show you real quickly, again, just to throw it out there right now, and I don't want to overcomplicate it, okay? So you all know I'm not much into, I used to, but now with my lifestyle, I don't do a lot of day trading. But I've been playing around with something for a while now, and these market conditions are just phenomenal, okay? And eventually I'm going to automate the system. But what I just wanted to quickly show you, just to get your thought out there, you can always email me ideas as well, is this. So on a day like today with the Dow, this is the YM, okay? We basically had, a nice sell-off. So, when the markets opened up regular session, which is where these white bars are, okay? We had just a perfect sell trigger, Hackenacci turning red, Laguerre turning down, okay? And this is a really nice move, okay? So when do you get out? You get out on the red dot right here, okay? So this is where you got out. Not quite at the bottom. We don't care. We're going to grab 80% of that trade most times, okay? But the better thing is, so when do I get back in, okay? So you can get back in when the Laguerre triggers right here. You got red again. You just made another nice move. See that? Then when we get towards the end of the day, Okay, I'm not a big trader at the end of the day. It's too sideways for me typically. But anyway, the reason I wanted to show you this is, you know, the Laguerre can be very handy for day trading. That's how it was originally developed. The Hackenacci can keep you into the trade. And if you like to trade, you know, like crude, you know, just as an example, and over here is the 1 minute chart. Okay, I'll give more information on this in the future, but I just wanted to throw it out there for you. That's something I'm working on. There goes my internet slowing down on us, right? Come on, crude, load for me. And I'm testing this up. You can see I'm using simulated trading course. So again, you can see all the moving averages are pointing down. So when that's the case, you come in the morning, again, a nice trigger right here. You would have got out right here. Okay, then you got this move, then you got this move, then you got this move. And that's really what we're looking for. And we're going to have more and more volatility, you know, as we get closer to election. And the markets are doing a really good job trending. So more to come on that. But if you do like to day trade, I will be doing some live events on that as well. Okay, probably December going into January. Okay. Yeah. So in this case, you know, let's say we were looking for, you know, shorts on, because all the moving averages are pointed down, right? So if you got in here, Jeff, right, on the Laguerre, right here, okay, you want to stay in until you get a green dot, right? Because you're getting in on red candles, so you want your green dot to get out, okay? So again, I just like to make things so it's simple, especially when you're in the trading environment. You know, you want to make it less confusing for yourself as well. Got it. Sorry about that. Okay, folks. So again, big picture, go back to the daily charts here, okay? I am definitely focused from the stocks perspective. I am waiting for longs, and I think when it comes, it's going to be fantastic, okay? So right now, this is the ES. Okay, in fact, let me bring up the diamonds, DIA. Okay, it looks pretty much the same, but I just wanted to show you. So interesting enough on the diamonds, right? We're closing right here. Okay, red dots, but look what can happen at some point here in the near future. Okay, is that going to be Thursday? Is it going to be Friday? Is it going to be Wednesday of next week? We don't know when, but when it does, right, we can make our money. We can make our money, okay? That's really what you're looking for in that type of environment. So that's how I look at things, and I hope you're finding these useful. Now, next week, I will not be holding this webinar because that's when they're coming back to fix my internet and wire everything properly, and it's an all-day event. So I didn't want to schedule it and then cancel it, okay? So you'll see that I'm not holding one next week, but then they're back on weekly after that, and I should be good to go, okay? So I know I gave you a lot today. I will definitely be sending out the recording to everybody that registered for this event, and we'll go from there. But good luck with everything. And again, if you're not sure, if the markets are undecisive, sit on your hands, wait for the next entries. That's the best way to do it. You're going to be able to trade most weeks, folks. So if you have to take a week off, it's not the end of the world, okay? And yes, I will be open. Sunday's video will happen this week. Absolutely. Absolutely. And we have an appointment, I think, tomorrow, right, Colin? So looking forward to that. Okay, everybody. Well, best of luck. Please email me with any questions. Other than that, see you in a couple weeks.